listening to the Non-Del Influencers Podcast, brought to you by First Funding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
All right, everybody, welcome back to the latest episode of Non-Del Influencer Podcast. I have one of my absolute favorites in the industry, Brenda DiScala from Freedom, account executive, long-time account executive for Freedom. One of my favorite things about you, Brenda, is your tenure with Freedom. Tell everyone how long you've been at Freedom now.
Oh, well, thanks for having me. You're one of my faves too. So I've been here 19 years as of last May.
That is as of last night?
Last May.
Last May.
Yeah.
That is amazing. That type of tenure speaks volumes about you and your organization. I absolutely love people that have that type of tenure at their companies. And so kudos to you and congratulations. The industry's changed a little bit over the last 19 years, I would imagine, right?
A little bit.
Couple new customers come and go, I'm sure, right?
Yeah, one or two.
Yeah. And you're in the Florida market. And is there a specific area of Florida you cover, or are you kind of up and down the entire state?
Yeah, I live in Weston, which is like the west side of Fort Lauderdale. So I cover more of the South Florida area. And I mean, we can, anywhere we have a relationship with somebody, we're able to work with them. Freedom's great about that, but mostly South Florida.
So with that type of tenure, and being in the industry, obviously you've seen the ups and downs of what happens, and especially in the state of Florida, I'm sure you've had to deal with a lot of different things over your career. Kind of take me through, what you've seen in the non-Del side of things from maybe in the early beginnings of your career to where it stands today.
Sure. So I think with the brokers, especially as the years go on, they kind of try to move up the echelon. So if a broker starts out as like a one-person office, they try to get a little more talent, they get a little bigger. As they get larger, they like to expand their platform. So then that's when they have conversations and they ask me, about non-Del, and it gives them a lot of benefits.
Yeah, I think one of the things that, because I used to be on the same side of the ledger as you, right? I was working with an investor, and I didn't really sell too much non-Del in my time pre 2020, and then once we started seeing the investors mitigate some of that risk by doing the disclosures for them, right? I know you guys launched, right? They're doing the initial disclosures for them. Kind of seen an explosion of interest in the non-Del space. And I'm seeing a lot of lenders that want to improve their footprint with regards to marketing, state expansion. I'm sure you see a ton of that. In the state of Florida, people are probably just going out and getting a ton of state licenses out in that area, I would imagine, right?
Mm-hmm. Yeah, because everybody's moving here from different states, so they take the trailing, people with them as well.
Yeah, exactly. So what are you seeing in your marketplace today in the state of Florida? What's selling out there for you? What are the trends that you're starting to see?
So with the non-Del, the three biggest trends that I'm seeing is they're driving growth by good talent acquisition. The non-Dels have such a good platform and they offer a lot more flexibility. So they're getting the seasoned loan officers. And especially, there's a lot of bases around here. We're near Southern Command. So there's a lot of VA. And with VA activity, it's a huge benefit to have a warehouse line because you're not locked into the 1% borrower paid. So a lot of the stronger loan officers are looking for the backing of the offices that are non-delegated. So I see they're growing a lot. I see the branding is very strong for non-delegated. So, any testimonial or kudos you see, say a loan officer post on social media, a lot of times it'll say, the lenders say they closed with like, oh, I closed a loan in 2 weeks. Awesome. But it kind of gives the kudos to the lender they closed with. If it's a non-delegated, it's their brand, which is great because it just, quadruples and, gives them a lot more brand recognition. And the third I see, the non-delegated that are very successful, they always prioritize their purchases. So even when there's a little dip in the rates and, there's like refi pockets here and there, they seem to always identify, prioritize, and take care of their referral partners and their realtors.
Yeah, lot of great points there, right? And I've had the pleasure of visiting accounts with you on the road, and you bring up all these points in front of some of the people that we talk to. I want to hit on the branding recognition, right? Because that is really one of the most important drivers, I believe, in that broker to banker conversion today. Social media drives clicks and links, and people that were in the distributed retail space like to have this brand name behind them. And now, as a lender, you are branding it. And I've talked to LOs. It does matter in the lender side when you talk to your borrower and the name of the lender is consistent throughout the entire transaction with regards to all the emails that they're getting, all of the paperwork that they're getting, signing the note is in the lender's name. You don't have to have this question of, oh, I thought I was doing it with XYZ lender. Who's this that I'm seeing on the note? That matters a lot to a lot of people in the distributed retail that are coming over to our marketplace.
Totally agree.
And then explain to the people that are watching this why you think the VA piece is such an important piece of it. I understand the compensation side of it. What else is driving that you're seeing?
Well, with the VA piece, if you are a broker, you don't have as much flexibility towards giving the borrower what they want or competing with others. So if a veteran is, say, going to Navy Federal or, their USAA, like where they're acclimated already right now, they link to them. But if you have a non-delegated who, has some other options for the veterans, like can give them some of the arms versus just a 30-year fix, and it's more aggressive, and they're not locked into that 1% borrower paid.
Right. And I think what you end up seeing, right, is the lenders in the non-delegated space get a little bit more flexibility with issuing credits, just to get that loan across the finish line. And
Absolutely.
I'm sure, my kind of go-to is every time we go through a cycle of refinances, everybody wants it done faster and cheaper, right? And so, you and I have been doing this long enough where I remember where 30 days was plenty of time to get a refinance closed. Now everyone wants it closed in 14 days or less, right? And you can imagine that the borrower is hearing about interest rates. And I tell people all the time, if you think that your LE and your CD is not being run into Chat GPT before the borrower gets to the closing table, you're sadly mistaken. And so in order to compete, you're going to have that flexibility to say, you know what, Mr. and Mrs. Borrower, is it okay with you if I give you a credit at the closing table? Let's just get this one across the finish line and let's get this win for you. And I think that matters a lot in that non-delegated space for sure.
Absolutely.
What are you seeing with regards to outside of the non-delegated space? I know Freedom is doing such a great job. What's selling for you guys out there?
Our government arms. So specifically, FHA, VA, and the VA jumbos, giving the borrowers the options of the 3-1 or the 5-1 arm versus the 30-year fix has been huge because, affordability is such a big thing right now. And also a lot of people starting out, they're nervous. This is the biggest purchase of their life. If they're working also with, say, a financial planner, and they also want to put a certain amount of money away, by offering them an arm saying, look, you're qualifying at the note rate. You're going to save this amount of money per month. You can invest this per month. It's a huge win-win. So it's just good to give them options so that it's not just the 30-year fix. And then a lot of other brokers, we don't offer them, but, non-QM, DSCR, not every borrower fixes into the straight up conventional 30-year fix. So it's good to have a lot of other options.
Well, that's interesting. So, you guys don't offer that series of products. I don't even know if it's ever going to really be on Freedom's radar. I don't know what, I obviously don't have any insight into that, but how do you work alongside, you got such a good reputation in your market. Do you work alongside non-QM lenders, kind of partner up and go out and hit the field together? Is that ever something that you thought about bringing out into the field, like a dual presentation of opportunity?
That's a great idea. No, up till now, no, but next week, yes, I will be planning that.
Well, I know that, I've been in, like I said before, I've been in the field with you, and I know that your strategy is not to product dump and just talk about freedom all the time. Share some of the ideas that you've had. I know you brought out a financial planner before. Is it what other interesting things are you bringing to your client partners these days?
I just listen to them and whatever their pain points are, whatever they're bringing up, if they need help, like, say after the hurricanes, like Helene and Milton, which will be like about 2 years ago, you
Yeah,
know, unfortunately, a lot of people, their homes were displaced, or even if they were renting and say the apartment was destroyed, if the
yeah,
brokers have partnered or they have good connections with public adjusters, a public adjuster can also say, look, I have, you know, borrowers A, B, C, and D. They were living in this apartment. They have no place to live now. They can also buy like FHA with 100%, nothing down. So
yeah,
just trying to listen to them where their pain points are, how I can help them. Yeah, the financial planner, that's one of my good friends. That was a fantastic, idea because she was saying to me, I have a lot of loan officers. She was also previously in the industry, and she was saying with these loan officers, they have borrowers starting out and they want to set up a 529 or a Roth IRA or, whatever the fact, and they want to have a certain amount of savings for it. And she would kind of pair it and say, have you looked at a government arm? And it works out really nicely. They got a little bit of education on both sides.
yeah. So the theory being like, listen, you've proven that you can afford to make your mortgage payment, and absolutely, when the iron strikes, we should refinance you into a lower payment. But just don't go spend that money. Take that difference and put it towards a policy or an insurance plan or a Roth or whatever it might be. I thought it was a great presentation that you guys partnered up and did that together.
Thanks.
One of the things that you mentioned also is that the non-Dell lenders tend to focus on their purchases, and I know that the purchase when rates do drop, I do think one of the knocks on our entire industry back in 2020, 2021 is a lot of our clients, a lot of our mutual lenders, they all kind of lost focus on the real estate agents and were so overwhelmed by the refinance activity that was just falling from the sky, right? What are some of the actionable items that you think that the non-Dell lenders are doing to stay in front of their realtors? Are they hosting open houses? Are they partnering with them on that side? Are they co-branding? What does it look like on your side?
I think it's like a trifecta. So I think a balance of these three things is what I'm seeing is causing the non-Dells to be super successful and beat out a lot of their competition. So it's exposure, relationship, and integrity. So with exposure, the successful non-Dells, I see they're at every networking event. They have a lot of title company, insurance people, financial planners, what have you, all different avenues, divorce lawyers. They dabble in everything. They're on social media. It's their brand that everyone's seeing. So their exposure's out there. Any of those connections from the exposure that get cultivated into relationships, they really foster them like a friendship. You want to foster them, just increase trust and likability.
Yeah,
Then from those relationships, if they cultivate into actual deals, the non-Dells have the integrity because their platform is so strong. So they have, IT, marketing, a loan officer assistant, good processing. From inception to post-closing, they go through smoothly and it's their brand the entire time. So I think that trifecta of like, it's like an ecosystem, but that's what I see. Those are the 3 points that they have to be super strong on. And the non-Dells definitely have that over a smaller operation.
yeah, no. Someone else on this podcast before made the distinction that the non-Dell, it really triggers for them when they go from originator to business owner. It's like a mental flip goes on of like, I'm going to drive this business rather than focus on this origination. And I kind of smile at it, right? Because we have built an industry where if you're in sales, no one gets paid until that deal is closed, right?
Right.
And so we all have to focus on the closing of, regardless, we have to focus on closing of transactions. But if you run it like a business, and I think we see a lot of non-Dells do this, they got a business plan in place, they have their marketing campaigns in place, they have their networks in place, everything that you're saying. when you trigger that and go from I need to get this one loan closed to how can I successfully manufacture the repeatable opportunities, that's the way to drive that business for sure. I wanted to ask you, because I know you're very passionate about networking and you're super involved in a lot of different organizations. Talk about the organization that you're running down in Florida.
Oh, okay. So yeah, it's NAPMW. It's kind of a tongue twister. So it's
Yeah,
National Association of Professional Mortgage Women. And our
yeah,
charter is less than a year old. It's like 10 months old. We're the Gold Coast charter. So yeah, it's been amazing. National Association of Professional Mortgage Women uh,
yeah.
started, yeah, crazy.
It's a
Started
mouthful
in
for
19,
sure.
it's a mouthful, yeah. It started in 1964 by 9 women who were not allowed into the mortgage brokers conferences. So I don't even know how they found each other, but they
Yeah,
did. And they started this way back when. It fizzled out a little bit around COVID because most of the meetings were in person. And so we partnered with them to start a charter down here.
yeah.
And I am blown away. I mean, we don't just have women, we have men, women, but we have such industry powerhouses like podcasters, authors, an estate planner, financial planner, insurance, title, processors, loan officers. I had no idea the power of networking. I mean, we all emulate off each other's strengths and knowledge and our best practices. So it's been amazing. I highly recommend getting involved in any type of network that interests you.
Yeah, I think, I mean, I always think I got started in this industry I think my first job in the mortgage business was 1999. And up until 2008, we did networking, right? I know, I mean, networking was part of what we did,
Right.
but the industry support amongst professionals, I don't think it's ever been higher. Basically, what I'm saying is that I think we just used to look at each other as like such competitors, right? In a very, very challenging and a very cutthroat market. And now post COVID, like the rise of industry events and the networking that everyone's doing and the support that we're all giving each other in the industry is phenomenal. I just think it's a great turn for our industry as a whole.
I
Right?
do too. That's a good point.
Feel like we're all rowing in the right direction.
Yeah, that's a good point. I do too. I definitely see that.
What are some of the best events that you guys have thrown at your platform so far?
Well, since
What was the biggest one so far?
they had a national one over on the West Coast. I wasn't able to go to that because my older son
Yeah,
was graduating college. But since we've started it, and we are not just in South Florida, we're pretty much all over the place. We've done one Zoom per month, but we've had
yeah,
just really good, we had Christine Beckwith as a speaker last month. We had
she's great. She's
she
fantastic.
was amazing. Oh my gosh, amazing. Dustin Owen was on a couple
Yeah,
months before that. So we've just been having a once a month Zoom call. And then for down here for the locals, we've been having in-person events and they've been like so fulfilling, just totally moving. It's been great.
yeah, that's great. That's great. If you going to that, one, I love that you're encouraging everyone to take part of that. Um, I just it's funny because right before we started filming this podcast, I just got word that we hired somebody for first funding this is their first job out of college, right? And so super excited for this opportunity to introduce somebody new to the industry. If you were to sit there and give somebody a word of advice or a theory of success for long-term tenure, which you have an amazing record of, for coming into the industry, what would be the advice that you would give to somebody?
Well, first off, congrats to that new employee you have. That's so exciting. I love that because they're not jaded. They have no idea about the past mortgage bubble. So congrats. That's so cool. I think that's really exciting.
Yeah, I'm excited.
Yeah, my advice would be expand your knowledge base and your network every single day. So listening is learning, but writing is retaining. I think every single borrower, realtor, title agent, insurance agent, everyone they meet, just get out there, increase your network, really listen to what everybody has to say, read nonstop, like read Atomic Habits, or there's so many amazing books, but write down every day who you've met, what their goals were, how you can help them, what the tips were, anything you listened to on a podcast. Write down everything. At the end of the week, revisit what you've written down, because they say, I think we only retain like 10% of what we listen and read.
Yeah,
So
of
I
course.
think writing down who you've spoken to, what was important about them, revisit it, and then schedule your week to follow up with all of them the following week and improve on every single little tip that you've heard on a podcast or read or from a realtor event or anything. So I think the more people you know and the more
That is
knowledge you have.
fantastic advice. One of the things, I mean, there's a lot of things that I admire about you and your work ethic, but as an account executive, I know you are out in front of your customers quite a bit. Like, what would you say the percentage of time that you spend in front of your customers versus at your desk working on your pipeline? What's your split, you think?
70-30 out in,
70 out in front of your customers?
30 in.
That's phenomenal. And when you go out and you prepare for your week in advance, are you making kind of like a milk route? Or are you looking at it as, where's my opportunities, meeting new faces? How do you kind of plan your week in advance?
If somebody reaches out with an event to start, like say a lunch and learn or a
Yeah.
big presentation in an office, wherever that is, I plan it around that.
Yeah. I blew someone's mind the other day. I used Chat GPT for that's the exact thing. So I don't know if have you leveraged Chat GPT quite yet?
You were the one that showed me that.
Yes.
Knocked my socks off. That was impressive. Yes.
Yeah, throw your database right into Chat GPT and say, hey, I'm going to go visit Destin, right? And say, show me the 4 clients I need to go see tomorrow. And it built out as a whole roadmap for us and the whole thing. It was fantastic, right?
It's unbelievable.
Yeah, it's awesome. Well, we're in the thick of summer, and I know you got a family. You got a couple kids, right? 2 kids, 3 kids, 3 kids. What is going on for the summer as a busy mom and a family person? What do you got in the thick of summer coming up?
Well, my oldest just graduated, so he's at his real-time job, which is crazy to me. So he's in Tampa. So I actually go visit him, and I visit offices over there. So that's pretty rad. I love it. My middle one's playing baseball, 65 games in I think 60 days. So that's ridiculous. So I sweat on a baseball field nonstop. And then my little one does cheer. So
you got it all taken care of. Brenda, I can't thank you enough for the time. You are a true professional. Freedom is very lucky to have you, and I know that you've enjoyed your time at Freedom, and it's been fantastic to get to know you better as we hit the field together. So thank you for everything, and we look forward to seeing everyone on the next Non-Del Influencer podcast.
You too. Thanks, Matt. Have a good summer.
Thanks for tuning in to the Non-Del Influencers podcast, powered by First Funding. For more resources and episodes, visit nondelinfluencers.com.